Let's talk about what's going to take the markets higher, the individual companies which have been doing all that well. And let me welcome on board one such management. Ashish Gaikwad, the MD at Honeywell Automation India, joins in on the show right now. Ashish, hi, morning. Great to have you today on ET Now. Ashish, you're aiming to double your India business to $1 billion within the next 5 years, with an annual growth ranging between 15 to 18%. What levers do you see for this kind of growth number?
Well, good morning, and thanks for having me here right now. First of all, I must say that we have um, two different businesses that I'm representing. One, which is the Honeywell Automation India Limited, the listed company that everyone sees, and then the other part, which is Honeywell, which has many other businesses also slightly outside of Honeywell Automation, right? So when you're talking about $1 billion business, we already are clocking those kinds of revenues in India for the entire Honeywell, right? And our ambition is to typically grow about 2 to 2.5 times of that of a GDP growth. So we do want to share when the economy is doing well. And for India, as you can see, most people are quite bullish about it. And there are all the sectors that we serve. Take the civil aviation, talk about the buildings automation, or the process automation, or infrastructure, etc. All of them we see as the vehicles for us to grow.
Sure. You know exactly what you said, that this is not just Honeywell Automation, but two segments of your business. I want to talk about the other one because despite large investments in infrastructure, logistics, Capex, your execution rate still seems to be lagging. I mean, I'm just looking at some numbers, and revenue for FY 19-23 has been about 3,175 to now 3443 crore rupees respectively. When do you see a meaningful pickup in your execution and revenues?
Well, I guess we have shown about 17% revenue growth year over year in FY23. And our order pickup is also in good double digits. Now, one thing we must realize is we are in a long cycle business, meaning our projects turn around 12 to 18 months. So when we pick up orders, we turn them over a period of more than a year sometimes. So that is one. Secondly, while there is growth, we at Honeywell always are very careful about the quality of orders. So we will be careful in picking and choosing which orders we would take for making sure that they are profitable and they are sustainable.
Morning. I wanted to also understand as to some of the challenges when it comes to the semiconductor chip shortage. Is that now behind us, and by when do you expect some of these challenges to tide over, and thereby how will that help the business?
Sure. I think if you take about 12 to 18 months, scenario when pandemic hit us and then some other challenges in the market, I think there was a bit of a chaos at that point in time. From that to now, there has been a very, very structured improvement in the supply chain, especially in the chipsets. And all companies, and we included, we have now shifted to new designs. We've changed our chipsets that we used to use, maybe 18 months ago. And therefore, everybody has learned to tackle this problem. And we are not still out of the woods because the capacities for chip making are still getting built. However, I think we are far, far better right now, and our delivery cycles have improved quite a lot. So I'm very, very optimistic that in about a quarter or two, we should be behind us.
Sounding bullish, things are looking up. It's never been this great for the manufacturing sector. Yet for Honeywell, the margins are below historic average. Why?
You're talking about the Honeywell Automation India Limited, and we are a mid-teens, margin company for the reasons of the business, the mix that we have, and it's a function of mix as well. And we believe that while we are in the mid-teens, when you compare similar companies who are having a similar portfolio and a similar type of mix, we will be in the first quartile there.
Incremental business do you see could come to a firm like yours because of the China plus one compulsion? One is need and second is urgency.
Yeah, certainly. I think we just don't want to just jump on the bandwagon of China plus one. We will always weigh where it is wise globally to invest. And we believe today India is a place where we have a strong confidence. Now, we have always been manufacturing in India. This is not the fashion of or the flavor of the recent season. We have 3 large factories in India, and we manufacture not only for the Indian market, but also for the regions that we serve from here in India. We can always think of increasing the capacities, and that plan, as we speak, we are deliberating within our teams.
The ratios I always look at when I judge the health of a company is ROCE. For me, that's the benchmark of understanding any company. Your ROCE in March 2020 was 35% and March 2023 was 19%. Why has return on equity, return on capital gone down?
Well, I think you know the reasons, the ups and downs that we have gone through in the last 3 years or so, pandemic included, inflation, supply chain challenges, and some of the others. I think we are tackling those, and I'm sure that in a long cycle business like ours, as we take the right actions and look at where we need to induce the capital, we will start slowly changing that profile as well.
About 3 years out, I'm not getting into an guidance here, but directionally, let's understand it. Do you see a marked improvement in your ROCE? Could it go back to your average? Let's say what you had in March 2018, in March 2019, because you had numbers which were north of 30. 30 has become 19. Could it go back to the glory days?
Well, again, I would not like to speculate exactly like what you said. What I can do and my team can do is to take the right decisions, take advantage of the current environment that we see and the growth that we anticipate, and continue to grow at a healthy double-digit number, probably 2 times or more of the GDP. And I think that's what will drive the rest of the parameters.
Ashish, I have 2 questions for you. And, first I want to talk about what are your plans when it comes to the defense sector? Would you be looking at tying up with other PSUs for avionics, for electronics, or the missile sector?
Well, again, so this is a portfolio that is not included in Honeywell Automation India Limited. So I just want to make sure for your viewers that they are clear. The short answer to your question is absolutely. Defense, we see as an area for Honeywell to engage. We have very strong technologies where we are already working with companies like the Hindustan Aeronautics Limited and some of the other private sector companies as well. And as this particular sector picks up and really gets into more and more products, we in Honeywell are very keen to engage with all those programs.
Tell me, within the listed entity, what is the status on your current order book? What are the order inflows that you're likely to see this fiscal? And which segment do you think is going to top growth for you? And, also if you could throw some color on new opportunities like, the 5G rollout, EVs and other new areas.
Okay, that's a loaded question. I'll take some time to explain that to you. So first of all, for Honeywell Automation India Limited, if you see the last year's performance, it's about 12+% growth year over year. And we will continue to have the similar double-digit growth as we anticipate and see the pipeline. And the sectors that we see are both the core and the non-core sectors for us. When I say core sectors for us in the field of automation, this is about the refineries, petrochemical complexes, chemical plants, pharmaceuticals, pulp and paper, etc., etc. I think that entire industry is putting new capacities, modernizing, bringing in digital solutions and therefore wanting to have cyber security around it. So all of that is a sweet spot for us at Honeywell Automation India. The non-core or the emerging sectors where we have engaged is the sectors like new energy and the gigafactories, right? And so that's another new area where we have started a strong start where people want to put manufacturing capacities for the batteries or electrolyzers or fuel cells. And also when we are talking about the increase in renewables like the solar plants, they need to be augmented with what is called as the battery energy storage system, which is juxtaposed to the actual plant so that at night time, when you need energy and the energy demand is peaking, you can supply through the battery. So again, that is an area which is of great interest to Honeywell. I think that is, so those are the sectors which we will be focusing on, not to sort of miss out on the new stuff coming up on the hydrogen, right? So we are again engaged very much on the automation part of hydrogen and the gas distribution, et cetera, et cetera. Coming to the second part of your question, the industrial Internet of Things, the IIoT you mentioned, the 5G, absolutely. If I have to mention to you which are the two mega trends that we at Honeywell believe we will be focusing on the most, it will be on the digitalization of the industries that we serve and the sustainability portfolio that we have, which is very uniquely positioning us for the next 10, maybe 20 years, right? So as a part of digitalization, IIoT, 5G, sensors, giving solutions which are cloud-based, which can go across the enterprise is a very much of a focus as far as Honeywell in India is concerned. I can just very quickly give you two examples. You must have seen so many companies coming up with the pledges that they want to be net zero by 2035 or 2050 or whatever. But the difficulty is, how do you measure where you are right now? What's your current emission position? And so therefore, using the IIoT and 5G technologies that we have, we can currently benchmark their emissions and then also chart out a journey towards their net zero goal such that they can track the emissions using these sensors and the IIoT technology on a weekly, monthly, and yearly basis. And it can also become a tool for reporting to the authorities in the country, right? So just as an example, how this whole thing is going to be getting an impetus with the net zero goals.
Right, Ashish, great to have you today on ET Now. Thank you so much for taking the time out and joining in.
Thank you.
Okay, that's the word coming in from Honeywell Automation. Good move on the markets.